Good. So, ladies and gentlemen, we are here again to learn, and today I would want us to learn something very interesting. So, please keep it here because we are going to learn very interesting concepts here, things that you really need, and the things that affect our daily lives. And today I want us to talk about tax compliance, tax compliance, tax compliance versus accounting, accounting, or business or business systems, business systems. Now, when you read that title, I want to believe that you already get something out of it. You want to talk about what is the relationship between tax compliance and the business or the accounting systems that you use in your business, right? So now, for those who are new in this channel, this right here is JS Online College, JS Online College, and your pilot here is CPA Sam. CPA Sam is your pilot today, and we offer CPA online classes, CPA online classes, and in these CPA online classes, we specialize in specific areas, especially business data analytics. We know business data analytics is a paper for those students who are pursuing their CASNEB courses, and it is the final exit paper. It's a practical paper that you have to do when you finalize your CPA journey so that you get your practicing license by ISPAC. So we offer that online course, and then we know very well, being a practical paper, being a computer-based paper, BDA is a sister and closely related to advanced Excel, advanced Excel, advanced Excel. So you might also not be doing BDA, but then you need advanced Excel knowledge. We also offer that. Then again, remember, we also do practical accountancy, practical accountancy. So we offer consultancy services for businesses in terms of business systems, in terms of their books of accounts, also in terms of tax matters. Then also for that student who is maybe someone who needs to know some bits of accounting, you are practicing, you are in the field, and then you face some challenges where you need a way to maneuver practically in the accounting field, then we are also here to help you, to help you. So those are the things that we offer. And then if you need any of those services that I've listed, you can reach out to us. You can either send a WhatsApp message, or you can send a text message, or you can call on 0743 715 645, or on 0739 362115. You can reach us out in any of those numbers. We'll be able to give you the guidance that you need. Good. So now, I want us to now dive and do the things that we're supposed to discuss here today. So we've been learning a lot of BDA, business data analytics topics. We've also learned a lot about advanced Excel, and we will still learn a lot about them. So if you're new, kindly review through the channel, and you'll be able to see lots and lots and lots of free videos on BDA, advanced Excel, and also practical accountancy. So here today we are looking at the actual, the real life experiences and how you get to interact with some of these things. If you're a business person, taxes directly affect you. If you are employed, taxes affect you. If you're not employed, you pay taxes in one way or the other. So let us dive deeper and look at taxes in a broader perspective. And then we are going to narrow down on how you can relate the business systems that you use, the accounting systems that you use, so that you manage your taxes in terms of business. But then we want to look at the overall view of taxes, because we know taxes affect individuals, taxes affect businesses at various levels, and then there are various levels at which we pay taxes. So we've just started looking at these bits. Tax is very wide. Tax is a wide topic, but then when we take it bit and stage by stage, we are going to exhaust and learn all the possible areas in tax, and we are going to understand. So we are here to learn. Let us learn, because knowledge is very important. In the Bible, it is recorded, my people perish because of lack of knowledge. That is in the Bible. It's not me saying, no, it is in the Bible. I didn't write the Bible. So my people perish because of lack of knowledge. Some of these things, let us learn. Let us learn every day. And as we learn, we get to better understand, and this helps us to maneuver life challenges and the situations we face in life. So I want us to look at these things in relation to how relevant are this knowledge that we are learning, how relevant it is, how does it affect you directly? Whether it is in business, how does taxes affect you? Whether on an individual basis, how do taxes affect you? That is what we are here to do today. So how do I want us to start? Now, I want, as much as we are talking about tax compliance versus accounting and business systems, let me now, before I go deeper into that, let us remind ourselves, what is it that we talk about taxes here? When you talk about taxes, what do we mean? And what are these various taxes that we find ourselves, paying and things like that? Now, those are the things I want us to look at, and I want us to look at it. Then finally, we will wrap it up and see the relationship between the taxes that we pay and the business systems that we choose to use in our businesses. Now, let us look at, for example, what is tax? Let me ask, what is tax? Do we know what tax is? This is a term that is very common to us. We've all heard of tax at various degrees, but then here I want to make it direct and to the perspective. So, what is tax? I would define it in a very simple way. I will say tax is a compulsory contribution to the state. The word is compulsory. Compulsory contribution. Compulsory contribution to who? To the state. That's how I will define what tax is, in a very direct and simple manner like that. Tax is a compulsory contribution to the state. Now, having known that it is compulsory, that already should tell you something. Compulsory means must. That is what it means. It means you cannot run away from paying taxes. And you cannot assume taxes do not affect you. I know I'm talking about tax compliance and business or accounting systems. But then you should also remember, as an individual, even if you're not running a business, you know that you pay taxes at various levels. And you know this knowledge is necessary for you. So do not tell us that this is for business people, this is for businesses. No, no, no. You need this knowledge of tax. So let's get down and learn. Let's look at the bits, and then we ask ourselves, how do taxes affect us in monetary terms? In terms of value, or when I talk on business terms, I will talk about cost. What is the cost of tax? In terms of value, what are we losing in terms of tax? And you know very well that in a business perspective, tax is a cost. And it is a cost that any business person must be ready to absorb. And that's why we are talking about tax compliance versus business or accounting systems. And I can even reframe that my title and say, how do accounting systems help you to manage your taxes, or help you to ensure you comply to taxes? But again, why must you comply to taxes? That is another thing. Why must you comply? Why must you comply to taxes? In terms of business, why must you comply? Because I know somebody is asking, and there is a question maybe lingering at the back of your mind. You ask yourself, why do we need to talk about tax compliance as a business person? How relevant it is? I will tell you here right now, very confidently, that you must comply to taxes. Do you know why? Because this is a compulsory contribution to the state, and it affects you directly. How does it affect you in business? In business, you pay income tax. In business, you want to claim your input VAT as a tax person, as a business person. When you claim your VAT, you will pay less VAT. VAT is a tax on you. And when you pay less VAT, it helps you to minimize your costs in terms of business. When you minimize your costs, you maximize your profit. As a business person, are you seeing this thing is relevant to you? Of course it is. Of course it is. So when we talk about tax compliance versus business or accounting systems, this thing is very important and relevant to everyone. You must comply because it's a compulsory contribution. And as a business person, being tax compliant will help you alleviate stress. It will help you alleviate a lot of hassles that come with it. You will reduce your costs and you will direct your energy to very important and significant activities, relevant activities that will improve your business performance. So now, let us go step by step. I want us to understand some of these things very well in relation to our lives for individual persons and also in relation to business. I would want us to understand it. Now, we move step by step. I've defined what tax is. Tax is a compulsory contribution to the state. That is one. Now, we now go and ask ourselves, what are these categories of taxes? Before we come to now look at specifics of these taxes, you ask yourself, what are these taxes? Now, that informs us to talk about types of taxes. I want to try to shorten these things so that we do not maybe, because tax is very wide. I'm just giving you a wider picture so that we understand before we narrow down to a specific area. Remember, we are talking about tax compliance versus business and accounting systems. But then it is important to remember and remind yourself, what are these taxes that we are talking about? Then we narrow down, and after we have the wider perspective, then we narrow down and talk about that specific. Because when I go directly and start talking about a type of tax here, someone will start asking, what is this type of tax? Where does it come from? And what are these other types that we are talking about? So that's why we are moving step by step. Good. Now, types of taxes. What types of taxes do we have in Kenya today? We know we have two broad categories of taxes. One, we have direct taxes. Direct taxes. Then we also have indirect taxes. So these are very, very broad categories, broad categorization of taxes in Kenya here today. These are very broad categorization. But then, as we do the very broad categorization of these taxes, we now go and ask ourselves, what are these direct taxes? Yeah, and I want to use a very, very simple description of these taxes. I will say that direct taxes are amounts you remit directly to the government. Amounts you remit directly to the government. Those are what we call direct taxes. And when we talk about indirect taxes, these are charges you pay. These are charges you pay. These are charges you pay when you buy goods and services. You pay when you buy goods and services. When you buy goods and services. And what are these types of direct taxes and indirect taxes? I just want to give you examples so that you can relate, so that as we narrow down to look at it in terms of business perspective and the effects they have and how you can manage it as a business person so that you reduce your compliance costs and also you reduce your tax burden. This one also we will narrow down and look at the individual taxation part. But for now, I'm just starting to give you the picture of what you want to talk about now. When we talk about direct taxes, one of the major examples of direct taxes that we are talking about is income tax. Income tax, right? So in direct taxes, the one that we can relate to very, very easily is income tax. Income tax. And then when we talk about indirect taxes, I'm just giving you an example of indirect taxes. I said these indirect taxes are taxes you pay or charges you pay when you buy goods and services. And examples of these indirect taxes, I can maybe give you 2 or 3. We know we all have heard about VAT. VAT is a tax that you pay. And then we also pay another tax called excise duty. Excise duty. And I can also maybe add the third type of indirect tax, and we can call it custom taxes. Custom taxes. Custom taxes. Now, having seen or having had now that broader view of these taxes and the types of taxes that we have, now let's narrow down and ask ourselves, what are these, how are these taxes charged, and how do they affect you as a business person, and also how does it affect you as an individual, Now, I don't want to make your day hectic by giving you a lot of information at the same time. I want you to just look at the broader categories, direct taxes and indirect taxes. We've already known. What are these direct taxes? These are taxes you remit directly to the government. Now, income tax. In terms of individuals, the best example of income tax is pay as you earn. Pay as you earn. And now the government, when it looks at the direct taxes, sources of direct taxes, it looks at one of it, which is pay as you earn. And this affects you as an individual. You as an individual. So when we talk about income taxes, what do we mean by these income taxes? We've already known that income tax is a direct tax because you remit it directly to the government on individual level, in the name of pay as you earn. And again, in the business perspective, you pay corporation tax. You pay corporation tax. In terms of maybe you have a rental property, you pay another type of direct tax. We call it rental income. It still falls under income tax. So those are examples. So in a broader perspective, what is an income tax? Now, it is an income charged on, it is a tax charged on income. Yeah. And some of these incomes that where you when you receive the income, you pay taxes, you pay this income tax, or I wrote income twice. We should just say income tax. I wrote income. I should just say income tax, not income twice. It is just income tax like that. Now, what are these types of income or sources of incomes where income tax will be imposed, right? So some of these ones are business income. So I can maybe list them and say business income. If you have a business income, you will pay income tax. It is a form of direct tax. Then again, what type of income do you, how are they charging? Is the government charging income tax on? They also charge it on employment income. Employment income. And that's why I was telling you individuals, people who are watching this video, that even if you are not running a business, but taxes are things that you cannot assume because you pay them. And if one of it, if you're employed, you pay employment income. That is a form of a direct tax you pay to the government. And we have just defined what a tax is. It's a compulsory contribution to the state. So after employment income, one of the ways in which you pay income tax, then also I mentioned something called rental income. Rental income. When you receive any rental income, you pay income tax. It's a form of direct tax. Then also on dividends, dividends that you receive, dividends and interest, you pay income tax. Dividend and interest, you pay income tax on them. Then again, pension income. When you receive any income in form of pension, you will pay income tax on it. Then again, if you are receiving any income from a digital marketplace, so there are many, I will not list all of them, but I'll just mention. Income from digital marketplace is also charged income tax on it. Also, if you have any income from a natural resource, yeah, if you're receiving any income from a natural resource, then you are paying income tax. Now, I want to just leave it there, leave the discussion on income tax there and ask you, now, these are one of the ways, these are one of the methods in which the government is collecting these direct taxes in form of income taxes. Business income, and I've given you an example of business income is corporation tax. Corporation tax is one of the examples of business income. An example of an employment income is pay as you earn. We all know what pay as you earn is. This is an income tax you pay to the government, pay as you earn. And it's also a very wide area of discussion, which we will find time and discuss. So that begs a question. That begs a question. You can frame it in different ways. You can say these are forms of income taxes, or these are incomes upon which income tax is charged. Or someone might ask you, what are these incomes that income tax is imposed? So income tax is imposed on business income, employment income, rental income. But again, you can convert it and say methods by which the government is collecting income taxes. So these items I've listed here, these sources of income I've listed here. This one can also be said, for example, these are methods by which the government is collecting income taxes. So I think let me just mention it here, though briefly. I'll not go so much into details. I'll say methods. Methods. I don't know if that ink, that color is visible. That color seems not very visible. Let me pick that. So I can say methods. Methods of collecting income taxes. Methods of collecting income taxes. So it is the same items that I've mentioned, but I'm just using different terms. So one of the methods I will talk about corporation tax. Corporation tax. The corporation tax falls under the business income. So this is a method of collecting income taxes. We've defined what are income taxes and the category where they fall. These are direct taxes. So one of the methods of collecting income taxes is through corporation tax. Another one is through pay as you earn. That is from individual income. For those who are in gainful employment, individuals in gainful employment normally pay as you earn tax from your salaries. It's being deducted every month. Corporation tax is a form of income levied on corporate bodies. So limited companies, for example, trusts, unit trusts, and cooperatives, they pay corporation tax, annual corporation tax. That is a method by which the government is collecting income taxes in Kenya today. Then also, there are those who pay advance taxes. Advance tax. Advance tax is also a method by which KRA is collecting income taxes. What is an advance tax? I will just mention, I will not write it, but I will mention. An advance tax is a tax which is paid in advance before a public service vehicle or a commercial vehicle goes for annual inspection. You know that vehicles are normally taken for annual inspection at NTSA offices here in Kenya. So there is a tax. Those commercial vehicle owners and public service vehicle owners, they normally pay some tax before or as their vehicles go for annual inspection. That tax which they pay is an income tax. And it is a method by which the Kenya Revenue Authority is collecting income taxes. Are you seeing the interconnection? Good. Another method of collecting income taxes by our Kenyan government is through installment tax. From the name installment, for those of you who have maybe secured loans or financing at any given point in time, you've heard about installment payment. So installment tax is all about, if someone has a payable tax, as a tax payable, yeah, for any year, that amount that is to be paid, for example, someone has a tax payable of about 40,000 in Kenya, this person will come to an agreement with Kenya Revenue Authority, which is the taxman, on how to pay installments on that tax so that you fully pay the tax. That is also a method by which KRA is collecting income taxes. Then I've talked about rental income. And, there is also, when I talk about indirect taxes, so I think for direct taxes through income tax, I don't want to go past that. I want to just leave it there and go to another category. Another category, which we mentioned here, are indirect taxes. You see this one, the indirect taxes. I gave you an example of VAT, excise duty, and custom taxes, but I want to be specific on VAT. And the reason why I'm talking about income tax and VAT, I was just, all these other explanations I'm giving you so that you can have the wider picture of the taxes that we want to talk about. But remember, our topic of discussion today is how is tax compliance related to the choice of accounting system or a business system? That is what we are talking about. Yeah. And when we talk about tax compliance, I want to talk about these two broad categories of taxes. And one of it is income tax. And we now know the category of income tax and how the government collects it, both for business and on individual incomes, right? Now, I'm diving into another type of indirect tax, which is the VAT, value added tax. And someone will ask, what is this value added tax? What is this value added tax? It is a form of indirect tax. So I just want to mention it here, value added tax, because it is an area of interest when we talk about tax compliance for businesses and the relationship to the accounting system choice that you'll choose for run your business on. You get that? Good. Now, listen well. I want you to listen. Listen carefully. And when we talk about the VAT, in full, value added tax, value added tax. And I'm looking at, a very simple description of value added tax so as to make you understand it so simply. I don't want to complicate it, not at all. So what is value added tax? I will say that, let me look at the simplest description of value added tax. Let me say it is tax which is charged on supply of taxable goods, either taxable goods or taxable services which are made or provided in Kenya. I think that makes a lot of sense. And that is a very simple description of what VAT is. So it is tax charged on supply of taxable supply of taxable goods. And the word is taxable. The goods that you supply must be taxable for you to charge or to pay VAT. Those goods that are being supplied have to be taxable goods. Or some other times, they are services which are taxable, right? And made, if they are goods, they are made, and if they are services, they are provided or provided. That is not the correct spelling of provided. So provided in Kenya, that is it. So that is a very simple description that I've chosen on. VAT, value added tax. It is a tax charged on supply of taxable goods or services made or provided in Kenya. And it is an interesting area of discussion, and there is a reason why I've mentioned it. I've touched on it because I know it is an area of interest given what we are discussing here today. Remember, I'm referring you back. We are discussing tax compliance in relation to the accounting system or the business system that you choose. Now, I would want to digress just a little bit. I would want to take you back. And now let's talk about accounting or business systems. We've talked lightly about taxes, and I want you to keep note. I want you to note that our areas of interest in all this discussion about tax, one of our area of interest is VAT. I want you to note that VAT because I want to give you a perspective and how it is related to the accounting system and how a mix, a uniform mix or an optimal mix of VAT and the accounting system. And again, the optimal mix of income tax. Let me also mark income tax, or an optimal mix of income tax and the accounting system, how they will help you as a business person and their relationship to how your operation is and on compliance. And I asked you, why do you comply? Why must you comply to taxes? I've given you a perspective. Look at the cost. And I want now to go to that direction and look at it moving forward like that. Good. I hope you are seeing the trend. There is something I'm bringing home, and I want you to, just take your time and understand what I'm bringing home here. Yeah? I'm bringing home a very interesting concept, and I want you to get it very clearly. Now, I want to move a little bit further and ask you, we've known what is tax. We've seen the various categories of taxes that we have. Now, because we are comparing two giants, which are two giants, we are comparing what is called tax compliance. We've talked about tax here. Now, let us go to the next bit and talk about the business or the accounting systems. And then, after we discuss the business and the accounting systems, we bring the two together. and we compare and contrast. And at the end of the day, we ask ourselves, as a business person, is this knowledge relevant to you? And then, if it is relevant, what have you picked out of that discussion? You get that? In the Bible, I'll refer you again. It is written, my people perish because of lack of knowledge. As a business person, you can manage your taxes by being tax compliant, and it will help you to reduce costs, and it will help you to focus on important factors and important matters affecting your business. At the end of the day, you'll prosper. Now, let's go to that section and look at it in a very, very simple manner. Now, I want to talk about accounting. I want to talk about accounting system. So either accounting or business. I have a reason why I'm giving them those two perspectives, accounting or business systems. And remember, we are still talking about these systems versus or in comparison to compliance and how relevant it is. So we've talked about taxes. So let's talk about this one here now. What are accounting systems? And what do we know about accounting systems? And why must we know them anyway? Now, when I talked about taxes, I said taxes are relevant to both individuals, people who are not running any business. Taxes affect you directly, and you need to know and understand how they affect you. Now here, when we come to accounting and business systems, we are now not talking about individuals. We are talking about a business perspective, because in your house, you cannot put up an accounting system. Even though, yes, you can at a different category, but then we are talking about an accounting or a business system in terms of business. That begs the word that, that answers the question of this other part of business system, right? It is in terms of business. So now let's go. Now, what is an accounting system or what is a business system? I know somebody is asking, somebody is begging the question, what is this accounting system? Yeah? What is this business system that we keep talking about? What is it? What is it? So that is what I want us to do next. What is an accounting or a business system? And that's what we want to discuss now here. Good. Now, when we talk about accounting or business system, I want to give you a very simple description of what accounting system is. Yeah? Now, an accounting system, an accounting system, an accounting system An accounting system, how will I make it so simple? An accounting system is a set of processes. Is a set of processes. Is a set of processes and procedures. And procedures used. Used to do what? Used to what? Used by business, because we are talking about business here. Used by businesses to track. Now, I want you to get that specification now. You know, we are defining what an accounting system is. An accounting system is a set of processes and procedures used by businesses to track. What are you tracking? What are you tracking? That is the question I want you to answer. To track. After tracking, before you even track, you have to record. To track, record, and analyze. And analyze. What are you analyzing? Financial data. Financial data. Now, I want us now to look at that definition of an accounting system. It's a set of processes. So there are these terms which are very important here. Processes. There are processes that happen in an accounting system. Then also there are procedures. Processes and procedures used by who? Used by a business. And I'm talking to you as a business person. I'm talking to you as someone who is charged with the responsibility of managing or overseeing a business to succeed. Someone has entrusted you with the responsibility of overseeing their business. Do you really understand the role, and how do you bring on board an accounting system? If you have already an existing accounting system, how do you intermarry your accounting system with tax compliance? Because we've already seen how important tax compliance is in terms of a business perspective. Yeah. So how do you get to have an in-depth knowledge of this? So I'm saying an accounting system is a set of processes and procedures used by business to track. You are tracking, you are recording, and you are analyzing financial data. Now, What is the basis of all this? Why would you want to track, record, and analyze? What is the basis of all this? That is what we want to ask ourselves. That is where we are headed. That is where we are headed. Now, we've talked about processes. Before I come to answer the question why. Why do we need to track, record, and analyze? Track, record, and analyze. Before I come to answer that, let me talk about these processes. What are these processes that happen in an accounting system? What are those processes? Do we know the processes that happen in an accounting system? Now, that is what we are going to answer here. Now, when you talk about processes and procedures, we are talking about, for example, the first process is recording. The first process is recording. And recording, you know, in business terms, what are you recording? What are you really recording? You are recording sales. You are recording expenses. What else are you recording in a business? You are also recording, for example, if you secure any loans, any financing to finance your business, there is a recording that is happening in an accounting system for that. Yeah. There is also, for example, if you purchase any assets, let me call it, for example, which term do I use? Equipment purchase, for example. If you purchase any equipment, you have to record it in your accounting system, right? And then if you sell any assets, because you know as much as you buy, you might also sell them. So one of the processes happening in an accounting system is recording. And what are we recording? I've given you examples of what we are recording. Sales, expenses. You can record your loans if you take loans. You can record any purchase of an equipment or an asset. You can record whenever you dispose or you sell any asset. That is one example of a process happening in an accounting system. Let us move slowly. We are moving to the next stage, As we talk about that, as we talk about that accounting system, and we've just talked about why is my writing? Where is the page I was working on? The page I was working on has just disappeared, but I'm getting it right now. I'm getting it right away. Which page was it? You know, I've done a lot of things here. I've discussed a lot of things here. But no worries at all. I'm seeing it is not in any of this. Okay. Let me go down. You see, we've covered a lot of things here. There are lots of discussions that we've done here. This was in 2024. This is what you are discussing. Good. This is it. So now, we ask ourselves, that why and what do you record? Why and what? You know, the why and the what is very important. We've already seen that whatever we are recording our sales, you are recording your expenses as a business person. And then at the same time, you are also recording any other transactions involving purchase of assets and also disposal or sale of any assets in that matter. You know, as much as you purchase, you might also want to sell. So when such transactions happen, then your accounting system will help you to record, such. Yeah, will help you to record that one. Now, we move very slowly to the next bit. We come to the next bit and the next process that is happening in an accounting system, and that is process number 2. That is process number 2, which I want us to look at. Process number 2. I'm wondering why. Okay, process number 2. Process number 2 that is happening is called classification. We talked about recording as the first process that is happening in an accounting system. Now we are coming to classification. Now, what is this classification and how is it relevant in our case here? What is classification and how is it relevant in our case here? So when we talk about classification, what are we classifying? Now, categorization of transactions. So we call it categorization of transactions. Categorization of transactions is one of the processes under classification. And e.g., what are these categories of transactions? We know we have in a business, when you sell, you get your revenue, right? Then also you categorize some transactions as expenses. You also categorize some transactions as assets. You also categorize, for example, if you have any liabilities. That categorization in terms of a business system or an accounting system, we normally call it chart of accounts. Chart of accounts. For those who are already practicing and those who are already using accounting systems, you recognize chart of accounts. You know what chart of accounts is. When you talk about chart of accounts, this is what defines and classifies the various categories of transactions that you do, whether you are recording an expense, a revenue, an asset, a liability, and the sorts. That is, classification is the second process that is happening in an accounting system. The third process happening in an accounting system is summarizing. Summarizing. What are we summarizing? Remember, the objective of an accounting system. Why do you need an accounting system? What is the objective of it? What is the objective of an accounting system? That is one thing that you need to be asking yourself. Why do you need an accounting system? I'm about to answer you that. But before, let me show you the processes happening in an accounting system. I started by recording and I asked you, what are we recording? I gave you sales, expenses, when you buy any equipment or any assets, any loans, or when you sell any assets. Then we talk about classification. That is a process happening in an accounting system. We are talking about now summarizing. What are we summarizing? What are we summarizing? And I believe you recognize, ladies and gentlemen, listen carefully. You know, these are not just terms. These are things that we interact with in our daily operations. If you work in any company, you know very well, you've heard, even if you've not interacted with them, but you've heard there are things called financial statements. Where do they come from? Financial statements come from accounting systems. And that is the third process in an accounting system of which we call summarizing. Summarizing. Now, it is in form in form in form of financial statements. In form of financial statements. That is when we talk about summarizing as a role of an accounting system, as a process. The things that happen in an accounting system, it also does for you summarizing. And when we talk about these financial statements, do you know what financial statements we mean here? Now, let me take you slowly. You don't have to be an accountant to understand this. If you're a business person, these are things that you must learn and you must understand them because they're important for you. And I want to give you the relevance of an accounting system. You know, as much as we are discussing this process happening in an accounting system, we are not telling you to be an accounting system expert. No, 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 no. That's not what we are doing. We want to just tell you a brief description. You know, as we talk about something, you need to understand it first. So let's understand what an accounting system is. I've given a definition of what an accounting system is, and then we are looking at the process happening. We are analyzing that definition. You know, in the definition, we mentioned processes. In the definition, we mentioned procedures. In the definition, we mentioned what are we tracking? What are we doing? Yeah? We talked about tracking, we talked about recording, and we talked about analyzing, right? What are we analyzing? Financial data. Now, we come here to one of these processes, and it is summarizing. And we are just saying an accounting system helps you to summarize in form of financial statements. Then, now as a business person, I bring this challenge to you. What are we? What are these financial statements? Now, for accounting students, for accountants, you will understand it even better. But even if you are not an accountant, this thing is very simple for you to understand. Yeah. Now, these financial statements that we are talking about here, they are very simple. The first one, let me call it Roman 1. The first one is what we call balance sheet. I know even if you're not an accountant, you must have heard of what a balance sheet is. That is one of the financial statements that an accounting system gives you in form of a report under its processes called summarizing. The second financial statement that you get as a result of this process of summarizing in an accounting system, you get another form or another category of financial statement. And what do we call it? We call it cash flow statement. Cash flow statement. You know, sometimes these things are very interesting. Balance sheet, cash flow statement. And, you know, for an accountant, I expect you to start asking yourself, what is the relevance of balance sheet? What is the relevance of a cash flow statement? Why do we need them anyway? Yes, the system will give them to us. How do we analyze and interpret them? But we are going to get there. The third type of a financial statement, the third type of a financial statement which we commonly talk about is an income statement. Income statement. Very simple. Very, very simple, guys. Now, I don't want to go past that. These are the common financial statements that we know. We've heard of them. Balance sheet, cash flow statement, and income statement. I know there is also the other one, which maybe if you don't have maybe so much knowledge about accounting, you might not understand, but worry not. We call it statement of changes in equity. Statement of changes in equity. Do not even worry about it so much. Yeah. But you must have heard of the word equity. So do not worry about that. Now, how relevant to a business person? You know, I want to challenge you as a business person watching this video here today. You are an entrepreneur, you run a company, you run a business. As much as your business might be small, but I want to give you a relevance of this information. How is it important to you? And how will it help you to maximize on your profits and minimize on your costs? And at the end of the day, you achieve the objective of your business. That's what we are doing here. Now, the third process we've just dealt with is summarizing. And the accounting system summarizes this information by giving us these financial statements. And I've given you the examples of the financial statements. What is the fourth process that happens in an accounting system? That is what we are doing next. The third, or this is now number 4. The fourth process happening in an accounting system is a very, 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 very simple one. And it is now analyzing. 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 Now, when we talk about analyzing, what do we mean? Now, you see that we already have our financial statements here. Now, we go ahead and now do the analyzing. And this one now analyzes the reports. Analyzes reports. And why does it analyze reports? Why is it an important process in an accounting system? It is important because it helps you to make decisions. Analyzes reports for decision making. Analyzes the reports for decision making. That's why these reports here are important. These things here, they are not just by terms. They're important for decision making. And the beautiful thing about an accounting system is you are making a decision based on facts. You are not making a decision based on your thinking or based on what your competitor is doing, but based on a real situation with data to support what you're talking about. Good. Now, I want to give you the fifth and the last process that happens in an accounting system. I've talked about recording, I've talked about classification, I've talked about summarization, I've talked about now we are analyzing these reports. Now, after we analyze these reports, now what happens next? We talk about financial reporting. We talk about financial reporting. We talk about financial reporting. And when we talk about financial reporting, now this is financial reporting now to relevant stakeholders. Now, when I talk about relevant stakeholders, do not think so deeply of, hey, am I really a stakeholder? I'm just a business person, I'm just an entrepreneur. No, worry not. You are a stakeholder in that your entrepreneurship business. So worry not. Do not look down upon yourself. So when we talk about relevant stakeholders here, who are these people we are talking about? We are talking about management. Let me start from that basic unit so that you don't feel like these relevant stakeholders are very big people. They're not big people. You are also one of them. This is management. Management. So as an accountant, if you work maybe as a let's say a bookkeeper or an accountant or a manager who is reporting to your bosses, either your directors or the owners of the business, you know you are the management. And you need these financial reports from your accounting system. so that you can present them. And why are you presenting them? For decision making. Remember, the system has already given you an analysis. And this analysis is used for what? Decision making. And when you make these decisions, you make the decisions for the interest of the business, interest of that business that you are talking about. So relevant stakeholders who needs these accounting reports. I've talked about management. I'm also talking about lenders. And I want to pause there a little bit and challenge you. Some people think that this knowledge is not for them. Let me tell you something. As a business person, you might feel that you have your hands in control of everything that is happening. Maybe you are always there in that your shop, you are always there in that your wholesale business, and you are very sure that you are not losing money. It's okay. No one is stealing from you. No one is stealing from you. But does it stop there? No, it doesn't stop there. As a business person, as much as you are there to oversee movement of money and you've employed all the relevant policies to make sure that you are not losing money, by, for example, you've done away with cash purchases, and therefore your clients or your customers who come to your shop to buy, they don't give any cash, so that you are able to keep in check any wastages or any losses that you might incur. That's okay. That is a measure to help you avoid unnecessary losses. It's okay. And then you are also there in case you want someone comes to pay in cash, you are there to check, to make sure that you are the one who receives it. And then you make sure you close the doors of your shop and you open it yourself. You make sure you receive the goods when you are supplied. It's okay. That is fine. You are not losing. No one is stealing from you. That's okay. But then, do you know the importance of having your records in order? Having your records in order is very important for your business. It is not all about being skeptical about someone stealing from you alone. No. It is also about having your records in order. Why? I've stopped at the point of lenders as a relevant stakeholder. Now, let me bring you this lender's perspective so that you understand it as a business person. You know what? If you are a business person, you must have approached any finance institution, either a bank or a SACCO or a microfinance lender looking for financing of your business. And nowadays, banks are selling a lot on LPO financing. They do a lot of LPO financing. LPO financing. And LPO financing, in this case, I mean they finance your stock. You just give them a purchase order, and then they buy for you the stock that you need for your shop. It's okay, they do that. But what do they consider? What do they consider before they give you this credit? Even if you go to your SACCO today to secure a loan for your business, that's why even if you are taking a mobile loan from any mobile app, you have to give them a reason. Are you taking a loan for a business, or you are taking a loan for your personal use? Why do you think they're interested in such information? There are various considerations they have to make before they make a decision on whether or not, and also on the amount of loan they can advance to you. That is why, as much as you are there to oversee operations of a business and you know no one is stealing from you, you still need to have your system in place. You still need an accounting system, and you need to have proper record keeping, proper books of accounts. And as a relevant stakeholder, these lenders are interested parties in your financial reports. Why? They want to know your going concern status. They want to know your going concern status before they can be able to consider you for any credit. And you know, as a business person, at one point, you need credit financing. You might not have all the money to run your business. You want to expand. You want to buy machinery. You want to improve your operations. You need financing. How do you get the financing? You need your financial records in good state. That's why financial reporting as a process of from an accounting system is important to this relevant stakeholder who is now the lender. Apart from the management is now for decision making, but for the lender also, it is another category of decision making now in terms of looking at the possibility of lending you or giving you financing when you need it. Then again, you also talk about creditors as a relevant stakeholder. These financial reports, which come from your accounting system, they are required by who? By your creditors. Yeah. Creditors are the people you owe money. If you owe anybody money, those are your creditors. they need to see your financial reports so that they know whether you will be able to pay them back, what steps they're supposed to make, and any relevant decisions surrounding that credit status that you are having with them, that your contract with them. Then another category of stakeholders who depend on these financial reports is the tax regulator or the government. Tax regulator. I want to just call them tax regulator or the taxman. They are the taxman. Now, how does the tax regulator or the government, how are they interested in your financial reports? Now, I want you to connect what we've been discussing. Guys, we are not just discussing about accounting systems. We are looking at accounting systems in relation to tax compliance. Remember, that was our topic. Accounting systems in relation to tax compliance. Now, we've mentioned important information about tax. Now we've come to accounting systems, and we've come to a point where we are identifying the tax regulator as a relevant stakeholder for your financial reports. Now, this is the point where I want to intermarry the two and bring you the relevance of this information to the business person that you are. Now, I asked you, why do you need to comply to taxes? I don't know whether you've answered it on your own. And then I again asked you, how is an accounting system relevant? Have you answered that also on your own? Up to this point where we've reached, you should be already be seeing some light. Yeah, you should be seeing some light. And in fact, I've also mentioned something about that, why you need an accounting system in place. Now, let us move step by step. Now, why do I need an accounting system? That is a business person asking. Why? Why do I need an accounting system? Why do I need an accounting system? I know if you're a business person and watching this video, this is a question you're asking yourself. Why do I need an accounting system? Let me answer you now. Up to where we've reached, already you are identifying that one of the relevant stakeholders, one of the people who are interested in your financial reporting, financial reports that you produce from your accounting system is the taxman, the tax regulator, the government itself. So you want, one of the reasons why you need an accounting system, one is to manage your expenses. Now, when I talk about managing your expenses, I gave you a perspective where you might be a business person and you are there in your business to make any payments necessary to receive the monies. It's okay. No one is stealing from you. It's okay. But then begs the question, are you able to manage your expenses? When paying your employees, when buying your stock, when settling your utility bills as a business person, yes, you are the one doing them. It's okay. And you are sure that you are doing it with the correct amounts you're paying. But then at the end of the day, how will you sit down and look at those reports? How will you know the going concern status? How will you track your cash flow? How will you track your cash flow? So I'm just mentioning managing expenses. An accounting system will make your work super easy because you'll find a very easy way to categorize your expenses in various categories, and then you get reports of each of those expenses. Then generally you will manage your expenses. You will know what have I spent where and why and when. What, why, and when. So this answers the question what, why, and when. If you are doing it manually without an accounting system, will you answer these three questions? What, why, and when? Will you answer them? Might not be very easy. If you get to a point where you'll be answering them with a manual system, it will be quite a task. You shall have done quite a lot. Are you ready to go to that extent? Are you ready? Are you ready to do the manual system way? And you get all these things at the when you need them? That is for you to answer. I will not answer that. Now, after you manage your expenses using this accounting system, how relevant again is it for you? Now, I want to just type there invoicing, right here, invoicing. And when I talk about invoicing, in fact, let me write it clearly because it is something interesting I want to bring to your attention here. Now, when we talk about invoicing, that is one of the greatest roles of an accounting system, invoicing. Now, when we talk about this invoicing thing, How is it relevant to you? Do you understand what is invoicing? I know you know what an invoice is. What is an invoice? I believe you've heard of it, right? Yeah. Whenever you sell goods to somebody, yeah, they will give you a pro forma invoice or they give you an invoice if I don't go into much details. An invoice is a document that is advising you on the amount you need to pay for whatever good or service that you've been provided with, right? You can issue an invoice. You can also be issued with an invoice when you buy. You issue when someone buys from you, and then you receive an invoice when you buy from somebody to advise you on what you are receiving in terms of service or a good and how much you're supposed to pay for that. Now, in terms of business, let's come to our perspective, our context here. We are talking about a business. If you're in a business, how do you manage your invoicing? Like, for example, you are running a restaurant. You have clients streaming in, walk-in customers coming in. People are giving their orders of the foods that they want to eat. Someone says, I want ugali, and then I want it with beef. I want chicken. I want fries. I want water. If it's a club or maybe, a bar, someone says, I need a shot of this whiskey. I need this wine, this beer, blah blah. Anything that you are selling there, it's okay. Very good. You are in business and you will sell. How do you advise this customer, this client on the amount to pay? If you're using manual system, you will be saying, I know you have an excuse on your mind. You'll say, I'll go for an invoice book. It's okay. It's okay. You will have your invoice book. As a business person, you might be there. You are the one who is writing these invoices. And in real life, most people, we are used to calling it bill, right? You give them a bill so that they pay. It's okay. You'll be writing this bill and then they pay. Now, if you are the business person who is writing these bills or these invoices in your business so that you give to your clients to pay you. Now, what guarantee do you have of accuracy? And what guarantee do you have that if you are not there in that business, someone who is in charge will do it correctly the way you normally do it? And how do you get the report of all the invoices that you've written for the past 1 year when you need it urgently? You've been using books. You have a lot of invoice books that you've already filled in. And now you want to get your year reports. You go for microfinance lending, you go to a bank and you want some loan. They ask you, they want your reports, your financial reports. But now because you are claiming that you're cutting on costs, you normally do your things manually. And because again, you fear that someone will steal from you, you normally make sure that you are there in your premises and you are the one doing all this. You record the invoices, you receive the money, and you keep. If there are any payments that are to be done, you do it yourself. Now, for how long will you need to reconcile all the invoices you've written for the past 1 year? Assume you are in a fast-moving consumer goods setup, or maybe you're in the hospitality industry, you are running a restaurant. How many orders do you have in a day? If it is a busy place, you have several customers coming into that premise to take their meals. Will you be able to keep up and record all of them in your book? That is a question that you need to answer on your own. If it is a shop, do you have all the time to keep writing? And how will you reconcile these reports and have a clear view? Will you be able to sit down every night in your house or maybe in that your business, adding and reconciling and writing daily reports so that at the end of the year, you can be adding all of them together? Are you ready to do that? It is tedious. I know someone is saying that I've been doing it and managing. It's okay, you've been managing, but is it easy? Answer yourself, is it easy? Are you finding it easy? Do you feel at peace when you are not there in that your business? Now, the solutions are here. Do not stress yourself. That's one of the reasons why you need an accounting system. You do not have to stress yourself that much. Whatever you are doing is a disservice to yourself because there are important matters you need to look at. Whenever, as much as you might be in that your business, but you need to look at the customer satisfaction levels. You need to be thinking on ways to improve that business. You need to be looking at the wider picture so that you make a decision. You should not be there looking at how invoicing is being done manually in the invoice books, how they're being written, whether they are correct, whether someone pays the correct amounts. No, you don't have to stress yourself to that level. Please, in this era of technology, take advantage of the technology and make your work easy, convenient, and accurate. Easy, convenient, and accurate. Those three terms are very powerful. I hope you can get how powerful they are. Now, that is one of the reasons you need an accounting system. Invoicing. I've talked about managing expenses. I'm coming to invoicing. And invoicing has lots and lots of things that we need to talk about. Yeah. So I've just mentioned it there. I want to mention the third one. Why do you need an accounting system if you're asking yourself and you are in this meeting? I've talked about to manage expenses and I've explained invoicing. I've not written any note about invoicing, but from the explanations I've given, you can be able to pick something already. Yeah. Now, the next thing why you need an accounting system, I want to talk about cash flow. And now I pose to you another question. If you're doing your things manually, you are recording your books, you are recording your sales every day, recording your expenses every day in your books, writing invoices for customers to pay, whether you are giving receipts after the purchase to customers, you can track the receipts and so that you get to know how much revenue am I making every day. You can compute it, add all of them in a month by opening that yearbook. And that yearbook is very close to your chest. And if you have a car, that yearbook is always on your co-driver's seat. Because you have to keep up with the writings and the recordings. You have to make sure that they are recorded and written every day. Don't you think it is so much work? Now, cash flow. Will you be able to keep up with the cash flow when you are doing your things manually? And I'm pretty sure, listen carefully, I'm pretty sure you will not be able to see your cash flows clearly when you are doing it manually. It is very tedious. Now, for you to easily track your cash flow, money coming in and money moving out at any given time and have a clear view so that you can manage your liquidity. You can manage your liquidity very well. And to also ensure you are not too liquid. Your liquidity should always be optimal. You have to keep an optimal liquidity level. Yeah? When I talk about optimal liquidity level is where you balance off how much cash are you holding? How much stock are you holding? How much current liabilities? How much long-term loans are you having? So that you'll be able to know that I can be able to take care of the cost of financing. I can be able to pay these liabilities and upcoming liabilities, the short-term liabilities as they fall due. I'm able to settle them. That is the perspective of liquidity. And someone can reason in cash flow in terms of liquidity, or someone can just talk about, for example, working capital. Working capital. But though this one now wants someone who understands what we are talking about deeply, in details. But I want to make things very simple. We are not going into details here. We want you to relate to these things we are talking about. Now, in all these functionalities of an accounting system, what is the basis? What is the basis? I asked you, why do I need an accounting system? And I've explained to you the things that an accounting system will do for you. When we talk about expenses, you will know expenses are so many. We have a lot of categories of expenses. And another direct expense, which is normally huge on businesses and we cannot afford, actually, we cannot really afford to forget it. It is payroll. Leave alone taxes. Let me also just write taxes here because this is one of the elements we are talking about here. Payroll and taxes. Those two giants are very, very crucial. They are major, major expenses. And then another category of major expense is, for example, cost. Cost of goods that you are selling. Cost of goods that you are selling. And we also have admin expenses. Let me just stop there. We know the categorization of expenses vary. And as much as I'm talking about payroll as a separate expense, in most cases, you might find payroll falling under admin expense. It's okay. It is okay. But then I want you to look at the major expenses. Cost of sales, cost of goods sold, the taxation effect, payroll expenses, and then overall admin expenses. And when we talk about admin expenses, we also tie it along with fixed costs. For example, rent is fixed. Security is fixed, and many others. Though I'm not going into the details of costing, but basically, I want you to answer these questions which I wrote here. I don't know whether you are just looking at them or maybe thinking deeply about them. I said an accounting system helps you to manage expenses by asking what expense, why the expense, and when is it paid, and how much is being paid. What, why, when, and the amount. What, why, when, and the amount. You get that? All these things can only be, you can only get a clear perspective from an accounting system. Now, let us wrap up. Why do I need an accounting system? What is the relevance of all these things that we're discussing in terms of what an accounting system can do to you? All these things will help you to just achieve one thing. It will help you to achieve one thing. And what is it helping you to achieve? Decision making. Decision making. That is what we are arriving at. Now, when you talk about decision making, I'm opening another chapter of discussion, decision making. And I will ask you, how does proper management of expenses helps you in decision making? And when I talk about proper management of expenses, I'm connecting that with the major categories of expenses which I've mentioned here. How will you make a decision on the major lines in admin expenses? How will it help you to make decisions on payroll expenses? How will you make decisions on taxes? How will you make decisions on the cost of the goods that you are selling? And as you make that decision, remember, a business setup has only two perspectives. As an investor, you only have two interests. What are your interests? Profit maximization, and then cost reduction. Cost reduction and profit maximization. Those are two major areas that you look at as an investor. You want to maximize your profits, and at the same time, you want to minimize your costs. Very, very, very important. Because that forms the objective of a business. Why do you run a business? You run a business to make profits. When do you make profits? You make profits when your revenues are more than your costs or expenses. That is when you make a profit. And this is what you want to achieve as a business person. This is the ideal situation that you want to achieve. You want your revenues to be more than your costs. Now, for your revenue to be more than your costs, you have to maximize your revenue, and then you have to reduce your what? Your costs. You see what I'm arriving at? For you to have a clear perspective of maximizing your revenue or your profits, I can even call it profits because we know it is the revenues through which you get profits. It is sales minus the costs. And for you to get a profit, the revenue that you get must be higher than the costs that you incur. Profit maximization, cost reduction. That is what this entire discussion on an accounting system helps you to achieve: decision making. Now, let us now bring all this. Let us marry these two broad categories that we've discussed. We started by talking about taxes. We talked about the taxes. We defined a tax. We touched on the various categories of taxes. Now we've narrowed down to the other category, and we are talking about accounting systems. Now, after touching on taxes and accounting systems, and now we know that in terms of taxes, the type of taxes that we are talking about, and we already know whether it is optional or mandatory. When we talk about accounting systems, I believe these discussions we've had up here now answers your question: do you need an accounting system or not? And this is where I brought this part of why do you need an accounting system? I've explained it. So now let us now go deeper and ask ourselves, with now the two informations that we have, how do you use an accounting system to manage your taxes? Or I can reframe it by saying, how is tax compliance related to the choice of an accounting system? And all of that narrows down to decision making. Because we know that tax is a cost on business. You see this tax here, it is under category of expenses in a business. Being a cost, and also in light of the objective of an investor, you want to maximize your profits, and you want to reduce your costs. So you see that one of the costs that you have to reduce is taxes. So we have to manage the taxes. And we have to find ways to maximize on our profits, on our revenues. How do we maximize? We maximize our revenues by looking at the whole system of operations in terms of reports, financial transaction reports. And all this picture of financial transaction reports is what we talked about up here. And we talked about one of the processes in an accounting system, which is financial reporting and analysis, where you are given all this other summarization of financial statements, and I gave you the financial statements that we normally have. And when you analyze it for decision making. And then the people who depend on that information, it is you, the business person or the management, the lenders, creditors, and the taxman is also interested in that information. So with that information, let us now ask ourselves what is the broader objective of an accounting system, and how do you use it to manage your expenses so that you make the correct decision? And which decision is it? To maximize profit and to reduce costs. That is what we are discussing next. And as we discuss it, for now, I want you to stop there because it's already too much information and I want you to digest it. And as we move forward, please stick here. Please do not go anywhere. I want you to subscribe. I want you to like. I want you to share, so that when you do these ones, you'll be able to get a notification. When you subscribe, you'll get a notification on these very, very important lessons that we are covering here. This is practical accountancy. This is consultancy in terms of business operation, business process engineering, and taxation. So please do not miss out on the next session. We are bringing together tax compliance and its relevance to the choice of an accounting system. When we do that, please, if you subscribe, you'll get a notification. Ring that bell so that you get notified when I post the next session for this. Like and share so that other people can also get this very useful information. So keep it here. Let us learn together. Let's keep the information rolling. Let's learn and let us get as much as we can. As we refer to the Bible verse, my people perish because of lack of knowledge. But we are here to continue learning and we will learn. Thank you. See you in the next one.